I think the unemployment claims that we're starting to see the last couple of weeks to be elevated are the precursor to see that the BLS, no matter how much magic is left in them, and by the way, they could have a starring role in Las Vegas. That's a magic show. That's how good they are. But I think it's going to be difficult to sustain that. And so the next few months, we should start to see a more softening across the board.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for June 13th through June 20th, 2023, while supplies last. This week we feature backdated 1-ounce silver Australian kangaroos at just $3.99 over spot per ounce. Backdated kangaroos are 4/9 fine 1-ounce silver sovereign coins of Australia. They are renowned for their purity and design. They come 25 to a tube, and with just 250 coins to a monster box, they are the most affordable monster box available, especially at just $3.99 over spot per ounce while supplies last. And finally, silver kangaroos are IRA eligible. If you'd like to learn more about a precious metals IRA, an IRA holding assets in a private depository rather than a bank or brokerage, call us, and we'll be happy to help you in that process. To order this special or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Grandich from Peter Grandich and Company. Peter, thank you so much for joining us today.
Thank you for having me, Elijah, as always.
Well, it's great to have you today. I did want to discuss what is happening with the precious metal markets. I know the recent news we've heard first and foremost is that the Fed is pausing, so they're not raising interest rates this last Fed meeting. Your perspective on that and how it impacted the markets?
I like to call it, don't worry, be happy crowd on Wall Street that will always see the cup half full no matter what, use the pause as, hey, all the worst is behind us. Eventually they're going to cut. And by the way, when they always cut, the stock market always goes up, so you can't miss. So it's a good time to get in, Mr. and Mrs. Jones. And that's what we're seeing. For the metals, it only took off some selling pressure. I don't think it ignited anything. I think we still find gold, in particular, caught in a multi-year trading range, capped near the old highs, and great support the lower we go in the 1900s. You could attest to the physical demand. And you like to see it break. But what I tell everybody, since it's almost a 10-year cup and handle formation, if you ever believed in these calls of $4,000 or $5,000 gold, you would need a foundation of 10-year base in order to get to that level. So the optimist who's been, calling for these numbers still is in his or her camp, because there's been no change on the long-term technicals of gold. The short terms, there's changes. We've been in a little bearish wedge, declining when we were hit 2060. That apex comes together at the end of the month. So we could still go sideways for a couple more weeks. But we should see a resolution to this, meaning a meaningful move up or down. You have to leave the reservation. There is a possibility to be down within the next 2 weeks. This kind of sideways movement should be coming to an end, and there is a significant move coming afoot as we get into summer.
Now, what indicators do you see that are showing that this move could be to the upside? Because I know some people out there are calling for lower gold and silver prices from here.
Well, I think there's a few things. The one, obviously, still is the consistent central bank buying, and that continues. And we've said now for several months, they're not buying for a trade. They're actually buying because of the continuing, and this would be reason number two, the de-dollarization, the movement away from the dollar, and America in general continues to gain foot here. And realistically, there's still a very underinvested North American investor when it comes to gold. In Asia, not as much, because there they recognize and have a history of having more exposure to the metals. But it's clearly not, I would find it very hard to, and if you forced me to try to come up with a reason why gold should fall a few $100s. But I don't have any issues at all of finding reasons for it to go up several $100s. And so the fundamentals still greatly outweigh whatever negatives are out there. I think part of the negatives, by the way, Elijah, are people who are also born to be anti-gold, or I like to call, they treat it like, kryptonite. And then there's those who still are holding their hopes on to that Bitcoin is the new gold, and to knock gold is to somehow help the Bitcoin of the world, which in itself is not going anywhere as fast. And we continue to see government, especially here in the U.S., basically moving to control it or influence to the downside. So I find it very hard to justify, even if I was forced to, reasons to be bearish on gold. Now, what this sideways movement has caused, and you probably hear that because I know I hear it, is people are growing impatient. And what compounds that is that they own things other related to physical bullion that aren't doing as well, mostly mining shares. And therefore, their disappointment on the metals is really exaggerated because their others is not working. In a sense, they have something to blame, and that's because gold's not going through the roof, which would hopefully lift up their holdings. But overall, I think the picture remains very bright for gold and silver.
I know we've talked about in previous interviews how bullish you are on particular junior mining stocks, and that sector right now is extremely depressed. It's more depressed than really any other time that we've seen in your perspective in, I believe, the last 40 years. Can you expand on why you're bullish there and why it is so depressed right now?
Well, I'm depressed with it because when I look at my portfolio, you can only be depressed, which when it consists of the junior resource stocks. I recently wrote a report. I've been talking about this, but I put it, to a blog, and I called it Junior Resource Stocks, Goodbye or Goodbye. And there are a lot of negatives for the junior resource that didn't exist 10 or 20 years ago, just as a market. The first is there's just not the retail financial advisor building a book of business on individual stocks anymore. That doesn't exist for any market. Very few full service brokerages and financial advisors, stockbrokers, whatever you want to call us over the years, still do that as a way of business. And the reason that's a negative is there used to be several of those who specialized in resource stocks. So if the junior resource company got he or she interested, they got their 100 to 500 clients interested. So even if those 100 and 500 clients are still playing the junior resource markets, which could be called into question, they now have to be reached in a different way, indirectly or one by one, which made it much more challenging for a junior resource company. The other is regulatory. Here in the U.S., basically impossible, even if a full service broker wanted to, or even some people that use discount brokers can buy a stock unless it's on the main NASDAQ or the New York. So if it has an OTC symbol, but it trades in Canada, the brokerage firms won't allow it. And the other side of that regulatory is they made it very restrictive for junior resource companies to promote or market. It's almost that, like they say, you can't say anything that sizzle can only be steak. When a junior resource company, I like to say, mostly only has sizzle at this point in time. So combine that all in conjunction with the fact that you're just not going to have, after you've had a bad period where people were concerned about inflation and the market was going down and interest rates were going to go up. While all that's happening, people are also going to call up and say, hey, get me some junior resource stocks. They're going to be one of the last choices. That's always been a mistake of the junior resource player, thinking a real bad market will help their market. It doesn't. You don't want to see things that bad. But they've come to a point now where the spread between what the underlying metals they're looking for is selling for historically and the valuations people are putting on them now are the lowest I've ever seen. But as I told people is, if you had the same interview 3 months ago, I would have told you the same thing back then. And so it's only gotten worse. And now what I have to say to people is it doesn't mean just because it looks like it's bottomed, but the risk now has really been weaned out of it. It's just aggravating that it's come like an L now. If you think of an L, It's been the bottom, and it's just dragging along the bottom. And you don't know how long that L is going to be. And unfortunately, a good friend of mine says, when you draw an L, the bottom line is almost as long as the line, the up and down line. And if that's the case, that would mean we still have a ways to go. But I don't think it's going to be that long before, because I'll tell you this, I've seen more capitulation signs in the last couple of weeks, and I'm not counting the nasty emails and blaming me for people's faults, just total capitulation, the way stocks are trading, the way even the people who normally talk about these things online are trying to make like people have amnesia and are not talking about all their calls that didn't work out. Maybe that's one of the differences. I feel like you can't hide behind a rock. You have to speak when things are good or bad. But I think that market shouldn't be confused in defense of what your work is owning gold and silver. This was the hard lesson that people learned. You want to own gold and silver, you got to buy the physical bullion. That's the bottom line. Then if you want to use the leverage that could come from rising prices, that's when mining shares come into play.
No, I think what you bring up is an important point. And obviously we can't give financial advice, but I think the argument here is that because the junior resource sector is so depressed right now, the downside potential isn't necessarily as much as it used to be. And I've heard the similar perspective on, for example, silver versus gold. Gold typically is seen as a more stable asset. If people aren't looking to take a lot of risk, they want to own gold, versus silver is more speculative, moves more dramatically. But where silver is right now, it's like, what kind of downside potential do you see for silver versus gold? Maybe gold has even more potential downside. So can you kind of expand on that interesting situation right now where, yes, the junior resource sector is typically used as leverage towards the physical metals, but right now it might be a perfect time because the downside potential is less because it's already so depressed? Well,
I won't argue with you how depressed it is. I can just take you out my portfolio now and show you depression firsthand. But keep this in mind. A stock goes from $2 to 20 cents and you go, wow, man, it's unbelievable. It's down 90 cents. How much worse can it get? But if it goes from 20 cents to 10 cents, that's another 50% loss from where it was. So, yes, I concur with you wholeheartedly. That's why not only I hold my positions, but I've tried to find ways to add to them in recent days. There's no question that the concept of rising metal prices, particularly in producing mining companies, that plays more of a role than in juniors, because normally a producer doesn't see a net major increase in his or her operation costs if gold goes up $100. They're still basically producing it around the same price. So that increase basically all falls to the bottom line. So if you want to say what is the best leverage way, it's a producer. It's not necessarily a junior resource company that's hoping to find something. But there's no question, having been in that market for most of my life, only out a few years, I can think of an only similar time was in late 1999 when gold broke under $300 and the junior resource market basically was considered dead. I mean, there were people that basically left it and switched into internet companies and things of that nature at that point in time. That's the closest memory I have to similar to what the mood and the valuations that are being placed now. But what's so hard to compare it to then was gold was 300 then, and now it's 1950, and yet we're seeing this. So probably arguing to support what you said is this is probably the cheapest they've ever been, at least in the last 40 years.
Now, I did want to get back to the Fed pause because this has been highly anticipated. People have been talking about a pivot, the Fed finally easing again. Now, this obviously isn't yet a complete pivot because they're just kind of holding interest rates as they are, but it is a significant move because it's the first time in 15 months that they haven't raised interest rates. Can you get your further perspective on this, and what does it really signal, and what do you see for the Fed moving forward in the economy?
Well, it will be hindsight to prove whether or not this was right or wrong. My only thought would have been is I would have still raised, then said the same thing, all the opinions you had of the future and all. And it would have given them 30 or 45 days that if things didn't continue to go the right way, hey, we're still in the raising phase. And if it really started to go and it came down, well, now we could really go out there and really say pause without a sweat. I think we're still on the fence if they achieved what everybody would hope they would achieve. But always remember this. For the previous 2 years, nobody was more wrong in anything than the Fed in every decision that they made, starting with when Yellen ran the Fed and she said there'll never be another financial crisis in her lifetime, all the way up to today. So from an historic, someone that likes racing on a racing form, the Fed hasn't really raced well in the last couple of years. So I wouldn't buy into everything. Of course, in an industry, Wall Street, where, I love saying this, you can toss a lot of these folks off the top of the Empire State Building all the way down. They all say the same thing, hey, so far, so good. Historically, there's always a tilt to spin the positive and de-emphasize the negative. They might have been premature in it, but nevertheless, I would just suggest to people who just a year ago were hitting themselves in the head saying, why did I own all these equities? Now with the recovery, we just remember an old saying, fool me once, shame on you, fool me twice, shame on me.
And can you give us an update on the economy and where you see it heading? Because, some people might be looking at the Fed pause and saying, well, if the Fed just doesn't hike interest rates anymore, it's smooth sailing from here. We have a soft landing. Your perspective?
Elijah, the BLS, the Bureau of Labor Statistics, has for 14 months in a row completely blown out all economists' predictions about the monthly employment. It has been so dramatically different that you cannot blame the economists for a change and their models. You have to blame that those models were based on a data expectation that's no longer valid. The BLS has done tremendous amount of massaging to create an or numbers that I don't think matches the other survey that's always put out at the same time, the household survey, which is a much more thorough, I believe, and more adjustable because there's not a lot of guessing and birth rate models and things like that installed to it. So I think the unemployment claims that we're starting to see the last couple of weeks to be elevated are the precursor to see that the BLS, no matter how much magic is left in them, and by the way, they could have a starring role in Las Vegas. That's a magic show. That's how good they are. But I think it's going to be difficult to sustain that. And so the next few months, we should start to see a more softening across the board than in just certain cases. And that could bode well into the Fed's decision. That's how what they said to pause could prove justifiable. That with that should also see no reigniting of inflation. Oil certainly going in the right direction for them in that regard, which is a key part to inflation. So I think the economy sputters. It dips into a mild recession, but I have not been in the big recession, big 30 to 50% down stock market camp. I'm not in the things are going back hunky-dory or we're going up 30 or 50%, which really makes me popular to no one, Elijah, just so you know, it's like Switzerland. But I do think the economy is more likely to slow down than speed up. There's a great bull out there that's saying that we're about to take off again. I really wish that same bull would be given a chance to explain how we're going to service $32 trillion in interest now, and the CBO says will be $50 trillion in less than 10 years. I really like them to explain how that'll be done and the economy can still function as we know it, because that's impossible in any known economic thinking that I know of.
Your perspective on why you don't see like a complete collapse in the stock market?
Well, one, people aren't anywhere as leveraged as they once were. The 1929 crash was due all to leverage. In some sense, the 87 when I started was. The big issue to make the potential correct being a 30 or 50% down forecast, which is still not out of the woods, so why these folks could still be right, is what's going to happen in the commercial real estate market. That is still a market in danger of really imploding. And that would be very negative. And that could still cause people to really not want to own a lot of general equities. I think that the thing we have to recognize is that there's a bias. I call them the don't worry, be happy crowd. I mentioned it earlier. It's very difficult to knock those people completely off their feet and unconscious. You can knock them down, but they're kind of like certain bugs that you kill a few and you think they're gone and they're back up a day later. There's still a tilt to equities. That's why I've always say it's difficult for people to expect things like gold to be recommended by those people, because that flies exactly in the face of what they make their living off of. So that's one of the reasons why I don't think there's suddenly going to be a crash. Now, what could cause we wake up one night, overnight a crash? Well, certainly some sort of thing that really, some water broke out, somebody decided to use a nuclear weapon. I think the other thing that's not discounted, besides the banks, it's frustrating for those who believe there's a lot of meat to it, and that is what looks to some, and I'm one of them, that the Biden situation could be the biggest scandal in modern era. But it would have to get legs. Right now, the mainstream media and the Democrats do the Salzman and Schultz. I see nothing. I know nothing. But the bottom line is, if that can break and be substantiated to where they can't ignore that political dramatic thing. And then the last one is Taiwan. That is, the other day, a news event didn't get a lot of attention, and it should, but it was demonstrated to be correct, that the United States has begun preparation planning for evacuating Americans from Taiwan. Now, people can say that's just precautionary because they don't want to look like what happened in Afghanistan, and that's true. But we continue to see the Chinese pushing there and pushing. They're sending more and more planes. They're putting more and more pressure. And that would be another factor that could suddenly cause the market to fall down a lot. But I find it very hard outside of that to think there's still another 30 to 50% down. I personally think the market's going to get locked into a very long trading range, which basically happened between the early 1950s right up to 1980. Where we traded in a very thin range, both up and down. It's much broader now, but between those high and lows, it'd be very hard for me to see double-digit declines and double-digit gains over the next few years after this rebound runs its course.
And that then takes us back to, how we're seeing high inflation right now. And if you just have a stock market going sideways to down, that's really not good if you're holding stocks, given that inflation is so high.
You know what? I'm really mad about some of the Main Street financial advisors, not because they don't really understand it, and they don't. They're very much taught about how to keep selling, but not educate their clients. What people don't talk about is if we keep creating all this debt at this record, the more dollars out there is more inflationary. And yes, I know there's a certain camp that talks about that the gold camp, the hard camp, it sells, things for danger and stuff like that. But you can't avoid inflation with the money creation that continues to happen. What rate it will be at, and then what happens with if we're cut off where, supplies get cut off for one reason or another and costs go up again. I'll tell you this much as oil has declined, and I still think it can go somewhat lower, we're probably between now and the end of the year, where there's going to come a time in my book to buy them again, because there will be another oil energy crisis. To think that the world is going to suddenly just flip to electrification, there'll be no need for it. You won't need natural gas. Everybody's going to live happily ever after. When we can't even provide electricity for demand now on a thorough basis without brownouts and blackouts and issues, and yet we're going to have all these things that need more electricity. And then we don't even have the metals that are going to need it in order to fulfill these dreams 10 or 20 years out. That's why something like oil is going to become attractive again. Probably not before fall, but it's certainly something that should at least start to be watched at this point.
And before we let you go, if we could kind of discuss preparedness, because there's obviously a financial aspect of preparedness, and you've talked about this before, how it's really important to, hold physical precious metals. But I think there's also a spiritual side of preparedness, because when it comes to the crisis that we're going to head into, the world hasn't been this godless, you could say, in so long, right? In previous crises, the world had Christianity, but now we're seeing so many people, who are not religious at all. And it's like, in the face of crisis, it's so important to have that foundation of Christianity. And without that, people don't have anything, right? So could you speak to a little bit about that, especially spiritual preparedness at this time? Because if we do head into a crisis, really anytime it's good to be spiritually prepared, but you really need that foundation spiritually to really weather any sort of storm.
Well, people should know now you've hit on exactly why I most enjoy your interviews versus most others, because you give me an opportunity to speak about something that's the closest and far more important to my heart and soul than anything financial or economic. So I'll be glad to respond to that. You can probably see over my shoulder, perhaps the most important dinner that ever took place in the world and what came of that. Yeah, part of the reasons that first of all, it's important for people to know that for over 20 years, I've openly engaged my Catholic Christian faith into my work, both with so-called general investors and for 20 years with professional athletes being involved in Christian sports ministry, et cetera, et cetera. I believe that all the problems that we look at now, socially and politically, and many of the economic ones, come from a dissipation away from what America was once built on, Judeo-Christian principles. And we now know with polls and studies where over 50% of Americans are either atheist or agnostic. And that was not the case in our parents and grandparents and before that. And as we moved away from a faith-based society, not necessarily Christianity, but also Judaism and others, where people have just moved away from faith in itself, I believe many of the issues we're seeing now is because of that, especially the stuff that comes from wokeness and all the views of, man is really a woman and you can do this to a child because he or she may not know what they want to be and all that other social stuff. In fact, those type of social issues is what stopped me from working in the professional athlete community, because how they embraced wokeness, et cetera. But I do think that if you do still use it as your guide, you have to take into account that many of the decision makers or how markets may move now are being moved from secular viewpoints, socialism, in some sense, communism viewpoints, than how we used to almost always move in one direction. And that plays a tough role for seniors, people like myself, who grew up in that environment, who didn't know anything else. And that is, I think, the underlying factor to what's happening here. Now, of course, depending on which particular faith you may have, you may say that, well, I don't really care because, my life is secure afterwards. And I think I can understand someone feeling that. But we're still called to live this life, to share our faith and live a godly life, if that is what you believe in. But it's becoming more challenging. We're seeing now in certain areas, even areas in the world that you would have never realized, where boldly speaking your faith can open the door to lots of troubles for you. And the thing that's happening in Canada, where the government is openly supporting seniors who are struggling financially and or health-wise, encouraging to take their lives in lieu of having to deal with that, is to me one of the most troublesome things that are happening in our society today, far worse than some of the things we may even be seeing on TV or online. But you and I would have difficulty going on a major network and being allowed to have this conversation. And thankfully, places such as yourself exist that allow someone to say like what I've just said, and needs to be heard, because I believe at the end of the day, our only hope is from the guy that led the table behind me. And for me anyway, as difficult as things may get, I try to keep that in mind, and it helps me get through the day. And I know it does you too, Elijah. And that's why I'll be really open and say it's the single biggest reason why I like speaking to you. Not that you're not a good, handsome young man or anything at all, but the fact that we share a common faith and that you're willing to incorporate it into our regular work commends you, and why I'll always be glad to speak to you.
Well, we really appreciate your time, Peter. I think one of the things you mentioned that really just rings true is that it's a lot of the problems right now in the world have to do with the people not wanting to take up their own cross, right? Thinking that life is not worth living. And that's very much the culture of death. And it's important to be that light to the world and realize that no matter how hard things get, life is always worth it, no matter what. So thank you so much, Peter. Any last thoughts before I let you go? And where can our viewers find you online?
Well, they can always find me online at Twitter. I also have a website, petergrandich.com. I also do some YouTube videos. But let me just say this. I pray that your business continues because it gives what needs to be heard, as we discussed, a voice where a lot of other places is being silenced. And I thank you for that. And I know I speak for a lot of people watching.
Peter, once again, thank you so much for your time, and God bless.
God bless you too.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.